the latest developments in payments keynote address. Moderated by Olga Bencini, AcceptLocal, with Vasilije Lekovic, Trust Lead, Jonathan Camilleri Bowman, OpenPayd, Kamran Hedjri, PXP Financial, and Vytautas Karalevičius, Bankera and SpectroCoin.
Thank you, Simon and Manfred. It was great discussion in their financial crime detection. Good morning, ladies and gentlemen. I'm very happy to be here. Thank you so much for joining us today. My name is Olga Bencini. I'm founder and CEO of AcceptLocal, a fintech and consulting firm that engage in solving. Just 1 second. We're going to put my presentation. I'm founder and CEO of AcceptLocal, a fintech and consulting firm that engages in solving the problem with delayed financial settlement. It's my privilege today to speak about their latest developments in financial industry. The format for this panel will be a brief introduction to the topic, followed by the open discussion with our panelists. 2021 has been definitely an eventful year with numerous regulatory changes. New regulation came into force in Europe and United States. New rules and update from the card schemes, new progress and development in real-time financial transactions, numerous breakthroughs in cryptocurrencies. The revised Payment Service Directive have impacted the entire European Economic Area, customers in Europe and European Economic Area. The new regulation requirements make authentication as a key focus for customers. In order to continue to provide the customers with an uninterrupted experience, card schemes have introduced strong customer authentication exemptions. Based on the data so far, exemptions unfortunately do not entirely eliminate the strong customers' authentication requirements, leaving issuers in Europe make their own rules and regulations. Issuers have established their own minimum transaction amount. They chosen the countries and conditions where the one-legged transactions exception will apply. The new TRA formula cannot really utilized by the acquirers' risk teams to grant the high-risk merchants, including the gambling operators, with an exemptions. Depending on which party is requests and applied with an exemption, the liability shifts to either issuers or an acquirer. There have been a number of rules and regulations in relationship to the recurring payments, where the merchant subscriptions are protected from the customer's disputes, where the rules have been applied. Unfortunately, Visa United States excludes dispute chargeback protection for a number of high-risk industries, including gambling and cryptocurrency, even in those cases where authentication has been successfully where the transaction has been successfully authenticated. For PSD2 in Europe and other regions, card schemes have introduced customer-initiated and merchant-initiated framework, which is a combination of the technological, consumer, legal, and the compliance solutions based on the existing card-on-file features. MIT type have resulted on a number of business benefits and challenges. New MIT type have created numerous business opportunities and also brought the customers long-term loyalty. However, there are the resulting challenges. The new technological enhancements required for the MIT framework needs to be implemented by the entire ecosystem. In Europe, their European issuers and card schemes do mandate strong customer authentication without an exemption in the case of the merchant would like to utilize their payments for the future use. Handling and storing full credit card data for the future payment increase the operational and security costs. Whether transaction is recurring by itself or an installment, as we know, gambling operators and other e-commerce utilizing the 6-digit PIN for the customers' routing allows the diversion of the transactions to the acquirer of the choice. Card schemes are now in process of migrating from the 6-digit PIN to 8-digit PINs, which to be completed by the April next year. After that, the 6-digit PIN will no longer identify either issuer, issuing country, currency, or the card type. I therefore predict that the merchant will either increase the level of their PCI DSS compliance or divert to the payment service gateway with multiple acquirers in order to perform the effective transactional routing for a higher payments acceptance and reduce interchange payments costs. The acceptance rate is one of the main indicators for many e-commerce and including the online gambling operators. However, as we know, the acceptance rates for the gambling players in Europe and the United States is low because of the issuer block gambling FTC. The wallet, prepaid cards, and alternative payment methods have been in common for many players and many operators to utilize. However, card schemes have introduced the new rule where their gambling MCC needs to be applied in case the funds are loaded to the wallet or prepaid card, in case of the customers planning to use their funds in the gambling company or the cryptocurrency. Bank transfers and ACH are remaining the most effective and low-cost payment methods for the many gambling and cryptocurrency users. The new fast-paced digital marketplace has cultivated an environment of the rapid purchasing decisions and fast deliveries. However, the delayed settlements for the international payments caused by the ancient global financial system inhibit merchants and customers await for their payments. Wallet users have been enjoying their fast transfers and for the low costs. However, before the instant payments can be performed, the funds need to be uploaded to a wallet. Real-time global settlement and the ability to use the funds nearly instant by merchant and individual is convenient, but also is an essential to decrease cash flow risk being in transit. The race for dominance in the payment ecosystem has generated the global opportunities. Cryptocurrencies would be a great solution for the payments challenges if there would be just one cryptocurrency acceptable by the government tax authorities in many countries, and there would no need to utilize a wallet. Cryptocurrency fever have fueled countless new projects and programs by financial institutions and led to the new partnership between the cryptocurrency exchange, card schemes, as well as the payment providers. So their global open banking development varied very widely. As we know in online gambling industry, and as well as the Simon mentioned earlier, the online gambling operators collect and match customer KYCs with their many third parties providers, and customers also encouraged to withdraw winning funds to the same payment methods the funds have been originated from for the AML purposes. It is important to understand with open banking. Their open banking grants financial data access to the third-party development companies. And therefore, as a result, open banking develop new technology infrastructure development, give a rise to increased controversy regarding the access of sensitive personal information across industries. Open banking may therefore result in a fewer players and may even decrease the number of the payments deposits into the gambling accounts, safeguarding players from excessive spending. Open banking, on the other hand, decreased the number of KYC providers provided with a streamlined customer verification process and therefore decreased the operational cost. We may witness the removal of AML requirements to withdraw funds to the same payment methods the deposit has been originated from. These factors may result in even stronger relationship between the incumbent bank and different financial payment providers. With this introduction out of the way, I would like to open the discussion to our panelist participants.